Welcome to Know Your Options, the Measured Risk Podcast.
The ultimate guide to navigating the volatile nature of the markets while managing risk purposefully.
Join us as we challenge the theory behind traditional asset allocation and dive into the mathematics of investing.
Whether you are a seasoned investor or just starting out,
this podcast offers valuable insights and practical advice to help you make informed decisions and manage your money wisely.
So grab a cup of coffee, sit back, and let's dive into the world of calculated risks together.
So welcome to the Know Your Options podcast. I'm Larry Kriesmer, and I'm here with my partner, Bernard Surovsky. Today we have Stephen Ambrosini, and he's with 2020 Financial Advisors, located here in Cardiff, California. And we're looking forward to meeting Stephen and learning more about his firm. Welcome to the show, Steve.
Thank you for having me. Thank you.
Yeah. So I'm just curious if you could tell us a little bit about how you got into the financial advisory business at the get-go.
Sure. Thanks. I love that question because this is a great business, and I never once thought I'd get into it, but here I am 40 years later, still doing it. I was a college dropout. I wanted to surf the rest of my life and just do that, and bartend, surf, and stayed in the restaurant business. And I was doing very well in the restaurant business. And I started interviewing my customers, asking them what they do, because I was doing well and I realized I was a good salesman. So I started interviewing my customers, and this is in 1978. And I started to ask, what do you guys do? How do you guys make what you make? And so I met one guy, and he said, I'm the greatest salesman in the world, and I make $30,000 a year. And I met the next guy, and he said, I'm the greatest salesman. I sell, whatever, and I make $60,000 a year. Then I met the next guy who said, I'm the best salesman in the world, and I make $300,000. And I said, that's the guy. So I had no plans of staying in the insurance world. And that was where I began. The intent was to get in, get sales experience, and then leave and get a real job selling something I wanted to sell, like golf clubs or wine or something, solar energy, whatever. And I just couldn't get out, because every time I tried to get out, the next job would pay me less than this one was. And it was probably had the same aggravation and frustration. So I just kept on hanging in there with it. And it turned into just a fantastic, wonderful career. And that's the beginning of the story. It's much more to it than that. That's the beginning of the story.
Yeah, I'll share a little bit about mutual background. I see you have the same designations that I do, actually.
Yeah, I saw that. Yeah.
I got into the insurance business because no one else would have me back in 19. I graduated in 85, and I'd actually really wanted to get into real estate, but the market in San Diego in 1985 was such that I must have sent out 40 or 50 inquiries and didn't even get a response. It was just like crickets. And so my father-in-law, actually, not then, but my now wife, but then girlfriend's father, said that I should talk to his life insurance agent, which I did. And we ended up working together for a long, long time. And that's what launched me into the business myself. So.
And was that local? Was that in California?
Yeah, here in San Diego. Yep, we're in San Diego. So that's the genesis for how I got into business as well. Bernard, your experience was a little different.
Well, I'm one of those rare characters that actually went to be interviewed looking to try to get into the industry. So I wasn't even recruited. I was like, I think when I walked into that office at that first insurance company, they were like, whoa, we've got a live one. And then I came to realize how much money they spent trying to recruit people. And I literally just walked in off the street saying, hey, I want to sell life insurance. And so got that similar kind of start. But it's I used to do construction, and one day you look at this and you go, there's only so much I can do with my hands. I really want to use my head more.
Yeah.
And right. So we're all life insurance guys. We'll get that out of the way.
And it's interesting though, how many times did we think about trying to call ourselves something other than that? We played with all these great titles because we didn't want to say, I'm a life insurance agent, I'm a financial consultant, I'm a chartered life underwriter, I'm an advisor. I don't sell life insurance, I help you buy it. We came up with all these great strategies, but in reality, we're life insurance agent. That's what we did.
Exactly.
That's what we started.
I remember Bernard telling me that if you get a chatty Cathy on an airplane and you don't want to talk, you just have to tell them that you sell life insurance, and that's it. You're done.
Yeah. I made a lot of money on planes. I sure did.
It's interesting. At least in our case, that life insurance risk management was a huge development in how we look at the world and how we deal with risk sharing and stuff. But let's move on to another question.
Bernard's point when Bernard was in construction, because it's something you relate to our clients. We need to establish that foundation. right? We're doing financial plan. We need to establish the foundation. What's in the foundation? Life insurance is one of those keys. You've got to have it there. Then the other pieces from there. But I often refer to that. Often.
What do you think is your most important role to your clients? Like, what's your process of, finding and or managing your clients? And what do you think is your most important role that you provide to them?
As you guys already identified, I'm clearly not the smartest guy in the world. And one of the things that I do very well, though, is I talk to people and I interview people and I draw them out. I spend a lot of time getting to know my clients and what are you concerned with? What are you trying to do? How do we get you there? And while I may not have, I'm not the guy that's going to build the portfolio for you. I got a dozen guys that will. So let's spend the time talking about what your concerns are, what your worries are, what keeps you up at night, what are you trying to accomplish? And here's the different strategies in which we can get there. And frankly, I don't care which way we go. I'm going to lay out 3 or 4 or 5 different ways for you that you can go. And here's pros and cons to every single one. So let's pick what you are comfortable with, what you can sleep with. So if I get back to the point of question, Bernard, what is it? It's being a resource for the clients and asking them and helping them on their plan, keeping them focused on their plan. I'm making a phone call periodically saying, hey, it's me. What are we doing now? What's the next thing? Bring me up to date. What's the next thing? What's going on? So it's probably that.
So it's kind of keeping your clients focused on their objectives is really your role. It's a kind of like a financial quarterback, for lack of a better term.
Absolutely. And when the markets are tanking, like we saw a couple of years ago, at the beginning of COVID, I'm the guy that's saying, calm down. We talked about this. We got our strategy. We got our foundation. Is everything okay? Mom's good. Mom healthy. Everybody's still working. The money's in the bank. Everything's secure. Don't panic. We'll be through this. We're okay. So it's that calming voice, I guess, that to let them speak with, to talk, get back to the strategy.
Yeah, I mean, if you're a guide and you point your tourist in a direction, you say, just go that way. And then you stay there and push them off into the future. They've got no chance of success. They're going to, they're going to come to a corner that they didn't recognize, or they're going to come to a T in a road or something and look left and look right and look back and see if they can find you. And if not, they're going to look around for somebody else to tell them which way to go. So it's really critical to, stay there with the clients and meet with them constantly and make sure they understand where they're headed. So what's most frustrating about this business for you? There must be some frustrations that you experience. Not every day, but what's the most frustrating thing for you to deal with?
Well, we merged with another company last year. The history, I don't know if you guys want to hear the history of the company, but we merged another firm last year. And it's been fantastic on so many levels. But they are now pushing us in a new direction with new technology. We're moving from Redtail, our CRM, to Salesforce, which is challenging. We're bringing, we got the merger. We got the merger with Schwab and TD Ameritrade. We got, constant changes coming at it for repapering clients, where we had to change the broker dealer. So some clients were repapering. So there's just a lot. There's just a lot of the new technology coming away. I had a very interesting discussion with one of my associates recently about I'm an Outlook guy. I've been using Outlook forever and I like Outlook, but the new push is to Gmail. And the point was made to me that the Outlook is the older generation like me. I'm 67. And the Gmail is the younger generation in their 30s. And they're kind of pushing us in that direction. So it's going to be good at the end of the day, but it's the effort to take us there, So that's the challenge that we're having personally. So I guess I would just sum up to be technology. I'm blessed with a good staff and with good people to stay with me. And, you hate to see people leave, but they do leave. And then that's the retraining and the refocusing on that position. But it would be the technology, I would say right now. Let's talk a year from now, but right now, that's the issue facing us.
Yeah, I mean, I feel a real simpatico with you. It's like technology and me. Oh,
no, yeah. Mm-hmm.
And once it's figured out, I'm happy. And then, of course, let's throw it all up in the air and do it all and start all over. And
what do you guys use for your CRM?
Redtail.
Yeah, it's great. Yeah.
What about performance reporting? What's your firm use there?
We use Orion. We use Allbridge. It would be those two, a combination of those two. Yes.
Yeah, we are on the Black Diamond. So
that looked great.
They're the two top, basically.
Yeah.
It's interesting.
If we stick on the challenges, if I go to Orion, if I go to Altbridge, or I don't know about Black Diamond, they're very much training us with podcasts and videos, right? It's not like I continually say to them, why don't we have a seminar? Why don't you fly us all in and let's put us in a room for a day and introduce your program and in depth. We'll all bring our laptop and let's dig into this. That's not what they want to do. They want to send us a podcast and sit there and listen to it and review it that way. That's not, I'm a asking questions type of guy. I'm that annoying guy in the meeting that's asking questions constantly, thinking, certainly it's good for me, but hopefully I'm helping others as well. And the challenge of learning the new technology is a bit of a problem. So yeah, I wish I had somebody at Orion that I can call up and say, hey, it's Steve again. Show me the performance. Where do you go? How do you do this?
You think about legislation that we're, subject to now with, in your broker-dealer relationship with best interests and those type of things and all the rollover requirements that we have to do in our industry. All this is great. It's designed to benefit the client, which is ultimately what all of us are about, is supporting that end outcome. But gosh, it'd be great if some industry, watchdog would make it so that all CRM systems were portable. And so that if you established a relationship with Redtail, you could, easily migrate that over to the next, platform in some adaptive way that would allow us to not feel like we end up getting locked into a place. Really, sometimes you can start out wonderfully and find out that there is a thing it didn't do, or that it's not capable of, or it can't talk to another program. And man, you're in a world of hurt trying to get out of that if change.
And yet think back to how we all began with the one card system and the paper it was just ridiculous nonsense,
I try to put that kind of stuff behind me, and so I have
so this new technology is sensational, right? Think about where we were and where we are. It's sensational, which makes you wonder what's the next thing that'll look like, right? What's the next evolution going to look like? But it's been fantastic for that. We were very fortunate when COVID hit and the shutdowns occurred and the staffs went home. We were already in the cloud. We were already paperless. We were already doing WebEx meetings. So it hardly affected us a bit. Because we were so used to it already. I kind of adapted to it when I moved up to this office in Cardiff, and so we were blessed with having that. But wow. Imagine what it was like for others who were not doing that type of change.
Yeah. We got similar, questions from our outside compliance consultants about, business interruption, and we didn't experience a business interruption at all during the pandemic, since we're so required really to be already resilient to that sort of thing. So we don't know what it's but we should be resilient to it. So
and let's go back to the insurance side. I mean, remember the old paper applications? Oh my gosh, everything's now. We recently did a very large, I guess you want to call it maybe a key man contract with a law firm which in 6 states. It eventually required 50 different life applications. We were blessed with using a DocuSign process, so it was just fantastic. We were able to copy the application, the bulk of the application. Maybe 80% of the information was similar. So we were able to copy that, document, and then had a couple of new signatures and fresh information going in. Imagine that before the DocuSign. How would we possibly have sent 50 apps cross-country, overnighted, signatures of the insured, signatures of the owner, signatures of the agents, and there were multiple agents in different places. Wow, right? Impossible. Yeah. So we're blessed with those types of the updates, those changes.
So what you're saying is that technology is kind of a blessing, but there's also the other side. I won't call it a curse, but it's just the other. Yeah, that's true. I mean, I do marvel at what it's done and the efficiencies it brings to our operational side. I mean, it kind of leads to, what do you consider to be your most, what is most rewarding to you about this business? What do you find most rewarding?
Bernard, that is such a great question, particularly when I'm in the later years of my career. To work with clients for all those years And the intangibles that I painted 20 years ago, 25 years ago, are now coming together.
Yeah.
And I told you this is what would happen, and it's happening. I told you this is what the income's going to look like. I told you what the retirement's going to look like, and it's happening. That's really encouraging. That's just a great feel-good story. It's again because we've been doing it for such a long time that we have these clients that are coming back, and we help them build the assets, we help them acquire the assets. Now we're helping them distribute the assets, and who's now calling? The kids, saying, "You help my mom and dad. Can you help me do the same thing?" And you're handing that to your kids. It's really a feel-good story.
You make a great point, because I was just reflecting not that long ago on, when we first get into this business, most of your sales thing is, sales generally is, you make a sale, you move on. But this is one where we almost have these intimate relationships with our clients that develops over time, because we are very privy to their most sacred information, which is their finances, which is key to everything else. And sometimes we find out things before the spouse even knows.
Exactly right.
It's been a very rewarding experience. And to your point, to just see these complete intangibles, I was in construction. You put up a wall and there's a wall. You paint a building, it's a new color. In this business, it's, you start laying these tracks early on, and 20 years later, you see the fruits of that labor. So I think that's a great point. It's good to know that it's a common thing.
And you never want to say, "Trust me," right? You never want to say that, but you can trust me. And this is what I'm telling you, it's going to happen, and it's going to happen, regardless of who the insurance carrier is. And I don't want to just focus on insurance, but it's a big part of my life. I made you a promise, and I'm going to deliver this. And when mom and dad pass, and I'm the guy that walks in, and they say, "There's the guy."
Yeah.
Oh my gosh. It's such a wonderful, wonderful feeling. Then you help those children as you promised their parents you would.
Right.
It's a wonderful, wonderful feeling. There's another thing too that is so rewarding, and that is how I've been able to benefit myself and my family from this career and the knowledge that this career brings to me, of how I can I hope I don't say this incorrectly. The word isn't, it's not enrich myself, but the word is to take advantage of the knowledge we have, the 401k, the IRAs, the life insurance, the managed accounts, all these different things. So I often say to my clients, I'm in the same stuff you are. So here's my net worth. Here's my statement. I'm presenting this to you. I got the same thing. And that's rewarding now in this point in my life that I can say, hey, as I step away, because I'm 67, I can't do it forever, right? It's nice to know that I built my net worth to a point that I'm comfortable with, right? In so many ways, and you guys sound like you might be the same. In so many ways, I'm that American story. My wife and I grew up middle class, blue collar families. Her family, my Catholic family, a lot of kids, not a lot of money, and yet look what we did, and look what we created, look what we built. It's a wonderful thing.
You talk about having some, intimate knowledge about clients, and and particularly when you add in life insurance as part of the practice, it's not just the finances, but it's the physical. How are you? From skin and contents, basically. So everything. I think another area that we benefit from in our industry is best practices, not just from being taught by other advisors, but from the clients. I mean, I've picked up some wonderful ideas dealing with estate planning and how to deal with the children of all types and complex, distribution patterns. These are all just fascinating things that you gather, particularly in our role. We're very much the quarterback in a lot of the relationships with our clients.
Absolutely.
Right. Bring in the specialists for sure, but that information all rubs off on us, and we can then be in a position to take that idea from client A that was really, really a great solution and be able to apply it to client F if it's a similar fact pattern.
Yeah,
that's pretty rewarding as well.
Yeah, and we were told this years ago by the big hitters that we were watching years ago and trying to copy and emulate, that the beauty of this business is, and this is a perfect example, the three of us, we're competitors, right? We're competitors. We've never competed against each other, right? And I hope we never do, right? But we've never competed against each other. but we're willing to share ideas with each other to help you grow and improve your practice, which you can convey to others. That's a wonderful thing of this industry. We're willing and able to do that, you know.
We can imagine being a physician and finding out a cure to something and not wanting to share it with anybody because they only want to do. I mean, it doesn't make any sense. So we have a very similar kind of, you know, feeling this way. There's just too many people. You can't look at it as a scarcity issue. You have to deal with it as a, you know, sharing the resources on how to fix things.
Larry, that's an excellent analogy. I agree.
Yeah. So you actually mentioned to your clients asking what keeps you up at night as part of the, you know, intimacy role. Mm-hmm. What keeps you up at night in your practice? Or anything bother you or are you concerned about?
No.
Perfect.
I am like I mentioned, I'm not the most analytical guy. I'm not the most technical guy, but I've had a lot of challenges in my life, business-wise. For example, one thing I did, you might have seen my bio, was 22 years ago, I picked up from Arizona and moved to California and literally started over again. And that was before all this wonderful technology was there, right? And the intent there, the issue there was we had lived in Arizona for over 20 years. My wife wasn't happy there. We kept on trying to make things better, but the climate, it just wasn't the best place for us. So after doing all of this research, and deciding that it was the right thing for us to do, and I did my own financial plan and knew what I had to do to survive out here, we picked up and we moved. And it was a daring move, and many people, including my parents, said, "What are you doing? You got it made in Arizona. What are you doing? Why?" And the answer was because it wasn't where we wanted to spend the rest of our lives. You know, where did you? And we all asked that question of where do you want to be? Arizona wasn't it. We also recognized that while the kids were young, we had to move while the kids were young because we wanted to make sure gave them a place to land to stay with us. So I started over again 22 years ago, and that was extremely difficult. But I am one thing I'm good at. All right, I've been telling you all the terrible things I'm at. One thing I'm good at is I'm not afraid to pick up the phone and dial for dollars. I'm not afraid. I got right back to my sales one-on-one. I got back to knocking on doors. I got back to the famous Ben Feldman question of, would you have an objection talking to me about your life insurance? And you just knock on the doors and knock on the doors and you do it again and again and again. And that helped me get right back into business. And I was, I eventually partnered with my present partners and we built the brand. But that was it. So I guess to answer your question, I'm not worried because I know I can do that tomorrow. You know, I know I can pick up that phone and call Larry and say, "Hey, Larry, Steve, can you talk to me for a couple minutes?" And then once I hang up with Larry, I'm calling Bernard, asking the same questions. And something good is going to come if I keep on doing my part.
Yeah.
So business-wise, at this point, no. Maybe there was other times. There's certainly times where I was heartbroken and worried, but not anything else.
I know.
And you guys,
tell me, Stephen, coming around a little bit to the investment side of your business, how are some of the ways that you guys manage risk inside the portfolios, and how do you communicate that to clients? Well,
when everything starts with me with it's not a formal financial plan. It's just a yellow pad. Okay, I'm just gonna do my yellow pad questionnaire and just ask you and just have and I got my routine, right? I've been doing it for a long time. So I got my routine. And I'm going to ask a lot of questions about who you are, what you're trying to do, what you got, what are your concerns, what are we trying to do, where do we want to be, And we're going to ask the risk. We're going to ask the risk questions. One of my favorite is, you're driving your car. Where's the gas needle before you pull over to fill up? And that tells me what kind of risk taker you are with something that you understand. If somebody tells me that the gas needle is down below E and it's on red and the pedal's grabbing my foot, that tells me I got a risk taker, So, but then I do if somebody's filling up at half a tank, that tells me I don't, right? So I try to get an understanding of what the risk is. Then I get back to my foundation, right? I got my foundation. I got the financial pyramid. You guys are all familiar with it. Got my cash. I got my medical insurance. I got my house. I got my disability. I got my life insurance. That's my foundation piece. And then I slowly start building it from there. So we get to the point where we're comfortable with the client wants. and how much I need to have in the bank. Is it 6 months of income? Is it 8 months of income? What do you feel comfortable with? So we establish that. So we've established that risk foundation. We take good for that. Then I got money to invest, and I got time, right? What's retirement look like? How long is it? What type, experience, things like that. So now I got $250,000 to invest, right? So I lay out the option, and I go to Mike's, and here's my 3 or 4 or 5 ways to go. One way is we could just go into a managed portfolio with no guardrails and just go for it. Aggressive, conservative, I don't care which way it is. No guarantees. We're in the market. This is one way in which we could go. And you are a moderate risk taker, so I'm going to build a moderate portfolio for you and then hand it off to my team and let them manage it following modern portfolio theory. That's what we're going to do. The other extreme might be the low risk guarantees. Am I selling treasuries? Am I putting in fixed annuities? Where's the extreme? What do I need to do? What is best for you? What are you most comfortable with? Remember now, I've got 6 months of cash in the bank, right? So I've already established that piece. I got the life insurance, already established that. And then I got pieces in the middle. And the pieces in the middle might be, are you guys familiar with Beacon Capital Management?
The BT Capital Management?
Beacon Capital Management.
Oh, Beacon, I'm sorry. Yes.
So Beacon Portfolio is one that I commonly use. And what is it? It's a program which allows them, where we're basically timing the market. We watch the market drop. It's, drop 10%, we get you out, But there's a place for this where we've got some security on the bottom. We got it backed up on the bottom. Once the market drops, I move into bonds, and we sit there until the market rebounds and get you back in. I'll go into more detail if you like on that, but that's another strategy. So that's let me invest in the market, but I'm fearful. So I need to have something beneath me to stop the drop. So that might be. Another one, we might be using some type of annuity, whether it's a variable or index annuity, which is going to give me some guaranteed lifetime income. Okay. So with those, and then of course, if I go back to the managed portfolio, there's all the variations on the theme within the managed portfolio. So without overwhelming the clients, and I'm probably already doing it, I got 4 to 5 different strategies, and then I turn back to them and say, what are you comfortable with? What is best for you? What's going to help you sleep at night? Because I don't care how great this investment is. If you can't sleep with it, if you call in the next day, forget it now. Okay. So that's kind of where I work. And then I turn back to my team and I have them build the portfolios for me.
So it's really just kind of giving the client the choice, kind of educating the client on what's available to them, and letting them kind of, with guide rails that you provided, kind of, pick what they want to do, like what kind of thing will work best. And I mean, obviously in an up market, everybody wants to be aggressive, and I want the growth thing. And then
exactly
along comes the whoosh, and they're like, oh,
exactly. And when we were new at this, and somebody wanted aggressive, we'd say, great, here's the aggressive portfolio. Now we'd say, whoa, hold on a second. Maybe we want to take that down a tab. We can be aggressive, but maybe we want to be moderately aggressive, or let's back it up at the top, because you're right, Bernard. When it works, it's worth, and when it goes south, we get clobbered, we get clobbered. So,
I always like to say everyone's a hero in an up market. It's when things go the other way.
Yeah. I remember years ago losing a client because I only made them 45% in the technology fund. And I said, what? It's up 45%. Oh, so what? So's everybody. Well, it was down 45 a year later,
I mean, 45 is crazy. It's like anybody and his brother would be just elated with that. Yeah, it's true. That wasn't enough.
Yeah, right.
Does your firm use any option-based strategies at all, or not?
I don't think so. But again, I'm sorry. I'm going to correct that. They do. The merger that we did last year, it's been a year now, with Private Capital Investment Advisors, they have a very deep bench. When we created 2020 Capital Management Inc., 2020 has been around. Financial planning firms been around for almost 20 years. Capital Management Inc.'s been around for maybe 8 years or 9 years. We were a hybrid. We broke away from the BD and became a hybrid. And we had all these different money managers working with us, and we had multiple portfolios. And then we brought in a new money manager, a wonderful guy named Vineet Madan, and he basically saw all this duplication we were having in our accounts. And he brought us from, I think, 15 to 4. And that was perfect for me because I'm that type of guy. I like simplicity. The new firm now has probably 50 options. And we're still kind of getting into what their different choices are, and it's getting used to what that is. Bernard, they probably do. I haven't dug into that yet. And I'm going to tell you that gets back to my original concern, their challenges. It's all the technology. There's so much going on that I really have been able to fully dedicate myself to those choices.
Right.
I will, though. Actually, I was actually on my list today to give them a call and talk about a personal investment that I want to make and say, okay, guys, where would you go? What would you do? What are my choices? So I think it's there, Bernard. I don't have that.
Yeah, fair enough. What are some of the tools or technologies you use to help clients with their financial planning aspect and just seeing? I mean, do you use any? I presume you use some software packages on just the financial planning side. What are those?
Well, thank you. As I mentioned earlier, I'm like an old school yellow pad, fact finder. So when I'm doing my fact finding, I can handle a lot of the basic stuff on my own with my products and my system. But then I get to more sophisticated, high net worth clients, and then I bring in my partner and friend Samir Tucker up in Costa Mesa, and he is a financial plan extraordinaire. He's the smartest guy I've ever met. He's extremely deep and technical, and he's the guy. So I'll bring in Samir. Samir will then run his financial plan, whether we're using e-money, whether we're using drawing a blank on the old school financial plan that we all use forever. What is it? Turn a blank on the name right now. You guys would know it. Traditional financial planning tool we all use. Just turn a blank on what it is. But he uses e-money and Orion, so he'll bring in that. So when I need that sophistication, then I'll bring in something.
So you're not the guy really using the software so much as bringing people in. Okay, cool.
Did you hear that?
So we have a very loud plane flying overhead. So
okay.
Sorry about that.
Having one of those F-18s, a couple of them circling right now. So
okay, if you can hear me, the system that we commonly use is called Profiles.
I saw that. Yeah, Profiles is one of the software programs we were using. Yeah,
exactly. Yeah.
Yeah, we grew up with that as well, and then moved towards e-money. It's similar software. Yeah.
Yep. Mm-hmm.
Yeah, it's remarkable as we do these podcasts how there are only just a handful of software packages that have, bubbled to the top as being the most common to work with. So maybe there is some chance that we end up with some sort of portability in the future between these different platforms.
That's really interesting because I had I had an interesting experience a few years ago before the virus knocked everybody down. We had and TD Ameritrade had this fantastic conference downtown San Diego, and everybody went. It was thousands of people, and it was wonderful. Great speakers, fantastic. And then you go to the basement afterwards where all the vendors are, and the vendors are hawking all their wares. And you're wandering through the basement, and you're touching everybody, and you're looking at it, and it dawned on me, we don't need anything else. We had everything that we need. Maybe we don't dig deep enough into what we have, but we already have everything. There was nothing new for us. Now, I don't know what the next new thing is going to be, but I feel as a company, we're right where we're supposed to be, technology-wise, with assisting our clients in business. You guys are probably the same. How much more technology we need? What's the next change going to be?
Exactly.
Yes, I was playing poker last night, and this thing called, was it ChatGPT or something, with AI writing letters and emails, and apparently writing essays for kids entering college and all that kind of stuff. I'm wondering, are we headed towards there where we're going to have these, AI written solicitation emails going out on our behalf, and just who knows? Yeah. It is pretty wild where, as we're living through this, what's it, like, fourth industrial revolution, or I don't know where the number is, even maybe fifth. How things are, but it still comes down at its core. It still comes down to relationships, right? Which are definitely built out of just being there for your clients. I think that's what it's always. Take care of the clients. Everything else takes care of itself.
One of the presentations at that conference I talked about showed TD was working with somebody on a hologram. So instead of me and you looking, instead of us working like we are right now, Larry is transported right in front of me, and I'm talking to Larry as he's standing in my room.
Wow.
And maybe that's the next vision. We would have thought maybe that's 50 years away. The way technology is changing, it might be tomorrow. You know?
Yeah,
it might
I
just
could
be
see that
quick.
showing up Christmas 2026.
Yeah, exactly. You know? And then we get crazy. Is it going to go from $100,000 purchase to a $599 purchase because everybody's getting it, right?
Yeah.
So yeah, we'll see what the next evolution is on that side.
I mean, have you ever worn those goggles, like those AI goggles or augmented reality, AR goggles, where you wear these goggles and, as you turn around, the whole view changes and you look down and it's wild, this thing, years ago. Have you ever done that?
I haven't. No.
I'm telling you, it messes with your head. It's wild. I did a rock climbing thing, and I mean, you see people literally people are like right there, and then you fall off a cliff and you feel like you're falling, and they're padding around the place because people would literally fall. I mean, it's wild. And so, that is that's upon us where, you and I could technically think we're sitting across from each other. Meanwhile, we have these goggles on and, we can't touch each other, but, you reach out to do something. It's wild what's going on.
That would be. Yeah.
What advice would Stephen of today give to, new Stephen or younger Stephen with what's the, somebody starting out in the business today, what advice would you give them from all that you've learned over the years, both from your successes and from your failures?
Don't quit. It's hard. It's impossible. You lose friends. You lose relationships. It's difficult. You're working too many hours, long weekends, evenings. It's hard. And it gets better. And eventually at a point, I mean, you're in the beginning, you're sitting across from the doctor and the attorney and the engineer, and they're so much smarter than you, and you're so intimidated, and they're making so much more money than you are, and you continue to do it. All of a sudden, you're at the top of it, and you're in control of your future. You're in control of your destiny. You're self-employed. You're enriching yourself with the knowledge that you now have and how you can invest properly for yourself. So just hang in there. Don't quit. Do it right. That's the other side, right? Don't take the shortcuts because we can make so much money in this business legally, right? Honestly, legally, and sleep at night and do the right thing for people. Oh, it's just so rewarding. So that would be one of the things. And certainly become a master of your own domain. So you know how to prospect, you know how to gather clients, you're owning the book. Make sure you're doing that because I'm sure we've all made that mistake of you working with somebody that you think is the end all, and then you find out they own everything and you're out the door and you're wondering what just happened here. So make sure that you know how to do that part of it. I think those would be some of the things I would address. Don't quit. Just hang in there. Don't quit. Maybe one more thing I would say. Find a mentor. Get your foundation. Find a mentor. And Larry, you said you did that already. Find a mentor and trust that person and follow them. Make sure you're doing the right thing. Though always think back to what mom and dad taught you and what's doing it properly. But yeah, I would say that would be it.
Well, I know we live in a world that's full of investment options. And the reason we started this podcast basically is that at the same time, many people don't know what to do or what choices to make. And so we've done this interview in a way of opening up the doors and talking about how different advisors deal with the same needs from all people, but they approach it in different ways. So thank you so much for joining us today, Stephen.
Oh, really? I enjoyed this.
Is there anything we didn't ask you that you would have liked to answer?
No, I could talk forever. I'm in New York. I can just keep on going. No, but you guys covered it well. Thank you very much. And I appreciate the opportunity for letting me do this. Thank you.
Yeah.
Thank you.
Yeah, thanks very much.
This interview also may contain statements that constitute endorsements of measured risk portfolios, also known as MRP. Please note that any such statements are not made by clients of MRP, but by representatives of other investment advisory firms that work with MRP. No compensation was offered or given in exchange for these statements. However, a conflict of interest exists due to the incentive to give an endorsement in the interest of a good future working relationship between the endorser and MRP.